All right. Hello, everyone, and welcome to Stock Market After Hours. My name is Mark Rusin. I'm a CPA here in the state of California, and it is great to be back with you guys. Had a little bit of a vacation to over the weekend and to start the week, so it's good to be back in the office. Good to be with you fine folks. So let me know as we start each and every week where you're tuning in from. What have you been buying or maybe even selling in the market? It seems like there's been a lot of buying as the markets continue to climb higher. Let us know where you're tuning in from and what you've been buying. Again, it's just an idea, a way for us to build an ideas list. We never follow just because someone puts a video out. Even myself puts a video out on YouTube. We never just want to buy a stock. We want to gain an ideas list and then take it a step further and kind of look at it from our own perspective. Because the fact of the matter is we all have different strategies. We all have different risk profiles. All have different areas of the investing journey that we're in right now. So you never want to just follow someone because they posted a video on YouTube or they put out an article on CNBC, Yahoo Finance, Seeking Alpha, whatever it may be. From that standpoint, it's always important for us to do our due diligence. So the last Choi was here very early at 11:19 a.m. Pacific time. That's for me. Can't wait to get started here. McVeigh, good to see you, my friend. Kevin, how are we doing? The Ultimate Wolf, how are we doing? John Bircher, my friend in Tulsa, Oklahoma, buying a little Google, or Alphabet, I should say, ASML, GPIQ, and a little Visa. Matthew, good to see you. Paul Costa from Massachusetts, New York, Yankee Doodle. Seamus from Vancouver. Ooh, I am looking at a vacation up in Vancouver. I'm going to have to reach out to Seamus to get some ideas out there. It won't be till next year, but that's definitely an area that me and the family want to go check out in late spring, early summertime next year. So you'll have to point us in the right direction. Dexter from New York City. Panama's in the house. How are we doing, Ron? SPY have NAV decay in a downtrending market. We'll have to see if we have some time to look at a little SPYI. Adam from Alabama bought a little JEPQ, a spot to park some cash. That's never a long-term position for me, but those JEPI and JEPQs are great spots to hold money. If I have a large cash position that I've built up over time, and I don't want it just to sit in a money market earning a few percentage points, I'll throw it into a JEPI and JEPQ, and then when I do need to utilize it, I'll sell out of that and put that money to work. So that's a way that I've kind of generated a little bit more income when I do, in fact, have some money to put to work there. We got Texas in the house, APLD for Matthew. Let me know. I will definitely give you some pointers and places to see in Vancouver. I will take you up on that. Whitefish Bay. That just sounds like a nice place right there. I live in Whitefish Bay, Wisconsin. Still buying QQQM, SCHG, AMD, and NVIDIA. All right. We are all in on the growth risk on type assets right there. Trinidad. Nice. There we go. We're going global. How about QSBT and BBAY? Yasmin with a question there. McVeigh been buying a little QQQI, JEPQ, O main alphabet, OB. Wow. McVeigh, you have been busy. Is that all in this week too? I mean, we're only on Wednesday. We've only had 3 trading days. I guess that's most of the way through the year since tomorrow's a partial day and Friday is a holiday here in the States for 4th of July. Long, good to see you. Julian, hey, Mark, I was holding some cash on the side in case we saw a dip, but FOMO'd into using it today on Taiwan Semi, Grab, and Novo. So Taiwan Semi, I think, is a fantastic buy there. We're going to talk a little bit about, the markets and reasons to be concerned, which we always like to pedal on both sides just to kind of give you some perspective on what are some of the tailwinds, what are some of the headwinds coming in. So tomorrow is going to be a key day for the markets with that jobs market or that jobs report that comes out a day early. The ADP report was not all that great today. We actually saw 33,000 decrease in private payrolls. But again, that's not something I put a lot of weight into. Tomorrow's report is what I put a lot more weight into. So we'll definitely touch on those here in a second. John Clay's good to see you. I have a Millie in HIMS. SCHG for McVeigh. Still in Marvell, buying more. Nice. That's been a great buy for us for those of you that are at the Edge Plus. We timed that one pretty good there. Thoughts about Oscar, and those ones are those new companies, IPO or newer to the markets and things like that. Big time retail trades are ones that I technically I don't get into all that much, and I would rather much take the approach of an options trader there. So that if I am wrong, I'm not investing thousands of dollars. If I do an option trade and I lose a couple $100, so be it there. But I also have the opportunity to exponentially generate a lot of wealth by utilizing options there. So with those volatile, smaller type companies, that's kind of the approach that I take. And we go through all of our options trading over at Options Edge Plus as well. Thoughts on ASML and AN? I'm going to go with AMD is what maybe a typo there. If it's not, correct me. ASML is again another recent buy for me in the Edge Plus. For Edge Plus members, you saw that. You got that trade alert that came out. It's obviously a play on continued AI growth. It's something that we were into beginning part of last month, so we've been in it for about a month now. But the valuation has continued to be great. We've seen already an uptick in the short amount of time that we've had the stock. Also have Lam Research in that. Those are kind of the two main ones, but ASML is far and away the leader in that space. As we continue to see a growth in AI, we see a lot more of the Taiwan semis building out factories. I've talked about it in a lot of videos in the past. The biggest problem right now for chips in the AI space is capacity. A lot of these manufacturers just can't keep up with the demand. So number one, that's a great thing for Taiwan semi because there's a lot of backlog to go through. But at the same time, as we build out more factories to kind of help meet some of the demands of the capacity issues, a lot of those manufacturing plants are going to be built with ASML type machinery. They're the best and the brightest. They're the biggest lithography machines here that are for these specific type high-powered type chips that NVIDIA, AMD, Amazon's looking to build their own, Alphabet's looking to build their own, and things like that. So I think it's a great long-term perspective. You'll go through your ebbs and flows with AI where, just like we saw with all the Chinese news, which I talked about on videos and in live shows that I thought was completely overdone. Boom, we've bounced from there. But that's those opportunities that, you're going to have to see come and go as the AI market goes there. So AMD has had a fantastic run. I've been selling some calls on that one in our Options Edge Plus, and we've been making, weekly income on our shares that we own currently there. Lakeland, Florida for Kevin. Good to see you. Sold out of Fubo. John's been buying SCHD, QQM, ACHY, and SCHD. So you doubled up the SCHD there. Thoughts on Oracle moving forward? Oracle's another one of those stocks, Harold, that has had a great run there. With these stocks, these more legacy type plays, when I see big moves like that, I tend to want to take a little bit off the table. I'm not saying to completely sell out of it whatsoever. So, definitely not positive on where you got into the position at. But if you do have some sizable gains there, no one ever lost money taking gains. Early morning here in the Philippines, 6:06 a.m. Look at that. We got Trinidad, the Philippines. Love to see it there. SCHY and SCHD. Awesome. Well, we got a lot of comments, a great group here. Scott from Ultimate Edge. Love to see it. Scott, Ultimate Edge, for those of you unaware, is both of our subscriptions combined. So that gets you access to all of our option plays, gets you access to all of our stock investing plays as well. So you don't have to choose if you like both of them from there. Mark Rusin, CPA. Hi, Mark. Are you a fan of The Room? Not sure what we're referring to. Is that a show? Haven't seen The Room. So awesome. Well, thank you guys for tuning in on this Wednesday afternoon, evening, or Thursday morning. If you're in the Philippines, it is great to have you guys for the stock market after hours. Let's jump into our economic update to take a peek at where the markets are right now. So as you can see, the Dow Jones up 4.6% on the year. The S&P 500 just a shy under 6%. NASDAQ's up 4.9%. We have the Russell 2000 down just 1.5%, so it's climbing its way back to the green area. Oil, not much change since the last time that we spoke, hovering. It upticked about $1.50 at $67 and change. And then Bitcoin is on the verge of around $110,000. Not sure if, for those of you that are in my Options Edge Plus subscription, you would have seen that I put out a Bitcoin play on IBIT today. So it's another way to play Bitcoin. If you don't want to own the actual cryptocurrency, there's ETFs out there that you can now own. Kind of more of a hands-off approach, but you can do options with it as well. Valuation, folks, that's where the concern kind of comes in. So 23.5 times, that's an uptick from where we were last week at 23 even. So when we look at that, we could see, the 10-year average sits right at 18.1, and that's higher than if we were to look at the 20-year average, which is closer to 15.5 times and things like that. That's based on a forward estimate of 265. So the concern is right now is that there's the economy and companies are actually doing a little bit better than many had anticipated. So what could we see if that ends up being the case, and if the numbers end up backing that up? We're going to see a lot of beats here coming for the latest earnings report. So what we have right now is that 265 EPS estimate. So let's say that analysts come out and they say, hey, things are better. We're going to improve our numbers. We think that the S&P can actually be 270, 275. Okay, great. That's fantastic. That puts us right where we were at the beginning of the year at 270, or even if you want to go to 275, that still gives us an S&P 500 that sits at 22.5 to 23 times. Extremely stretched there. You need some meaningful. We need 280, 290. Which is a big jump from where the current estimates are right now. So that doesn't mean that we can't keep ticking higher on the S&P 500, but it needs to be backed up by the numbers. So we just concluded the Q2 season here. Hopefully you guys saw my latest video on YouTube, which showed you two of my favorite growth stocks for not just the second half, but for the next 5 years. If you haven't, definitely check that video out that we put out just yesterday. And the thing to be concerned about in the near term, though, again, I'm a long-term investor. So near-term struggles and things like that, sure, I'll be losing money at that because my portfolio will likely be down. That's the importance of being well diversified at the same time. But for us long-term investors, that actually gives us a better opportunity. If I told you, hey, Amazon's at 220 today, but what if it fell to 200 tomorrow? I would be excited. Amazon's a top 5 position. So sure, I'd have a lot of negative losses in that position, but that's going to give me a huge opportunity to buy a stock more than 10% plus from where it's at today. I love to buy things on sale. That's the name of the game. If I'm going out to buy shoes, clothes, a hat, I don't like to buy things at fair value. Call me frugal. I like to buy things on sale. And my investing journey, it's no different. So that's why it's so important to understand valuation. Valuation is going to be key for your investing journey. And when we take a look here, you can see interest rates, not much change from the last time that we met. So the 10-year was exactly the same as last week. And the 2-year, 2 basis points higher at 3.8 overall right there. So we'll have to see. Those are going to be things that you want to watch in tomorrow's jobs report that comes out here. So again, this is a snapshot from last week with our valuation concerns. I continue to harp on that because I want you to be mindful. We don't want to get that FOMO type of trade because that is how we lose a lot of money when we just jump in to jump in. That's what we want to be mindful of. And when I talk about the valuation, I like to put it in terms of real estate. Let's say we had 2 homes, or 3 homes. All 3 of them are exactly the same. The upgrades, the backyard, the size, they're all pretty much the exact same home. There's no better view on one or the other. They're all looking at a hillside in the back. All exactly the same. I don't know where these homes are. They're definitely not here in Southern California. But let's say home number 1 sold in the past 3 months for $300,000. The same exact home went up for sale and sold 2 weeks ago at $310,000. That seems like a decent increase in a 2 weeks or 2 months, I should say. But now we have a few other homes for sale, and one is listed at $500,000. That's a sizable increase, a little over 20%. Would you run out and buy that home if these were the latest comps that you were looking at? Probably not. And let's say, this isn't the only one that's left here, but you're probably not going to run out and pay that's much more of an increase. That's the same thing that we're looking at with the S&P 500 right now. The historic comps were 15x. Now they're 18x, which we tried to give ourselves an out, and we tried to build a case on, hey, Mark, well, there's a lot more technology stocks. that are in the top of the S&P 500. Yes, that's why we went from a 15x 10-year average to today at an 18 plus X. So now what's the next thing that we're going to say on why the multiple should be up in the mid to low 20x? We already used the high growth technology stocks being in the upper echelon of the S&P 500, so we can't use that one again. Maybe things are just starting to look a little bit more overvalued and we're in need of a consolidation period. We don't necessarily, I'm not calling for a 20% pullback, but we need some sort of reset here. Either a reset on earnings increasing, which will start to enter our earnings season here in the next 2 to 3 weeks. So that's going to give us our first look here. But at the same time, over the next 2 weeks, we're going to have economic news, trade news, tax bills, job reports that are going to be coming out. They're going to kind of drive the market, which doesn't give us as many. There are catalysts, but doesn't give us as many to jump so much because a lot of that it's already priced in when you're looking at a multiple in the S&P 500 sitting at 23 times there overall. So you never want to buy things just to buy things. Okay. So that's going to be one of the key takeaways right there. So valuation concerns are definitely out there to be mindful of overall. Looking at the fear and greed index, it's still firmly in the greed section, I guess we can call it. A slight uptick. We were at a score of about 59 last week, so we're moving closer to the extreme greed. I am never fearful just because it's in the greed section. If it gets into the extreme, that's when I'm really starting to look and parse through my portfolio to definitely look for a lot of those overvalued type of stocks where I can take some profits on, maybe lower exposure on, and things like that. So firmly in the greed, but no real concerns whatsoever. So let's go over to our sector performance, and we'll take a peek at what's going on in the markets right now. So as we can see here, we have, call it 5 different sectors that are currently outpacing the S&P 500 over the past 12 months, which is up 13.5%. So we're led by financials up by 28%, industrials 21%, communication services up 20%, utilities up 20%, and then consumer discretionary up about 18%. So those are the ones that are outpacing the S&P 500. The only 2 sectors that are in the red, they're almost identical in terms of how far down they are, down 6%, both healthcare and energy. When we look on a year-to-date perspective, though, I like to see this, and we've talked about it in the past few weeks during our stock market after hours. I like to see multiple sectors that are outpacing the S&P 500. That tells us that the rally that we have seen has been a lot more broad. It hasn't been narrow focused, led by just NVIDIA, just Meta, and companies like that. Although they have participated, a lot of other companies have participated as well. So industrials, communication, financials, utilities, materials, technology, and consumer staples all outpacing the S&P 500 this year so far, which is up 5.4%. According to Fidelity here. Real estate is slightly below at up 2%. And then our red sectors are energy, barely, healthcare, and then consumer discretionary has really been the laggard. So if there was some stocks that you were actually looking to buy, saying, hey, which stocks haven't been participating all that much, it's going to be the consumer discretionary sector there. So down 4% on the year thus far. Over the past 3 months, technology has roared back, and a lot of that has come from those April lows, those early April lows. Technology up 22% in a 3-month period. Communication services up 16.8%. Industrials, and there is discretionary coming to life. Amazon is going to be at the top of that. Tesla is going to be at the top of that. And then we have a lot more that are in the red. So energy and healthcare continue to be laggards, whether you're looking a year out, year to date, which is really 6 months now, and then 3-month period. They continue to lag there. Real estate slightly in the red, but that's definitely a sector that if you are underweight on, looking long-term, that you can find some deals on, because the long-term trend is that rates are eventually going to start coming down, which is going to be a pressure release valve for the likes of REITs there. So in the past month alone, technology, communication services, and energy have led the charge. The only sectors that are outpacing. Every sector's in the green except for consumer staples, down 1.5% over the past month. So that's a look at where we're at in terms of sectors overall. Let's take a look now at the Fed Watch tool. So we got no change in the Fed rate last week, which was no surprise. We have another meeting coming in July, and then not another meeting until middle of September there. So we're going to get a break in August. Roughly every 6 weeks is kind of when we have our meetings. So right now, the futures are kind of predicting a 75% chance of rates staying unchanged in terms of July. That's firmly the camp that I continue to be in. I've continued to call on these live shows that I don't think we will get a rate cut until at least the fall period, which that first opportunity would come in September. So I believe that's when we will potentially get our first rate cut. 25% still thinks we may get a July rate cut. So if we go over to probabilities here, we can see all the way out until December of next year, 75% chance. This is, again, the area that we are in right now, 4.25. Those go up to, during the September period, a 70. Actually, more than that, if you include both of these here, about a 90% chance, 93% chance that rates will be cut either by 25 basis points or 50 basis points by that period there. And markets are still pricing in around 2 to 3 rate cuts through the end of the year. I think that's a little bit too optimistic, if that's the way you want to look at it in terms of rate cuts. But I'm still firmly in the camp of 1 rate cut by the end of 2025. So that's kind of where I sit in terms of rate cuts overall. Let's go back to the slides here and tell you about a exciting 2-day workshop. So 2 weeks ago, we had a fantastic 2-day workshop. It was centered around stock options. So now we're going to change gears and look at stock valuation. So we'll get some insights into some of the things that I look at when looking at and analyzing a stock and valuing a stock to determine, is this stock cheap or is it cheap for a reason? We want to find high quality assets at cheap valuations. We don't want to see stocks that have fallen because there's fundamental issues. And so we're going to kind of show you how I can kind of look at and understand more about high quality stocks being cheap. What are some of the metrics I look at and things like that? What are some of the key metrics, pieces that you want to analyze in order to build your own process? You want to build your own process. We don't want to follow people. We don't want FOMO. Mark puts a video out and I buy those 3 stocks. The thing about YouTube and articles is people can tell you when to buy. They often don't tell you when to sell. And a lot of the times their time to buy isn't even that correct. So you could be looking at people that are saying it's time to buy this stock, but is it a buy for the next month? Is it something I should be in for the next 5 years, 10 years? Is it a swing trade? Like, what are these things? So by understanding how to value a stock properly, you can manage it to fit your profile, to fit your investing style and things like that. So hope you guys will be able to join us just like we did with options though. We do have a limited number of spots. So it's going to be a 2-day option workshop starting next week. It'll be Wednesday, July 9th and Thursday, July 10th, both of them starting at 8 p.m. Eastern. You're going to get access to all of our recordings and things like that if you're unable to make it live. But I hope to see you there live so you can ask questions while we're going through a lot of this stuff. It's going to be a fantastic workshop, just like the option one was, which sold out completely there. So if this is something that you think you want to take advantage of, definitely get signed up because spots are limited. You can check out the link down in the description below. So let's go to our in the news section here. So jobs. This is something that has the ability to run the show tomorrow. It can send stocks to a new record high, which we haven't had until today, or it could finally send stocks reeling, which is something a lot of us have been looking for. Better opportunities, reset of valuation, headwinds from an economic perspective here. So the highly anticipated June jobs report is going to be something that gives plenty of downside risk. So make sure you manage your portfolio properly. For those of you that are part of our Options Edge Plus, you know we put on a few downside protection plays that if the market does fall tomorrow, we're going to profit from that. Our portfolio is going to come down overall, but we're going to profit from an option standpoint there. So the expectation tomorrow is for 110,000 jobs to be added during the month of June. If the ADP report that came out today was any indication of what that report's going to say tomorrow, we want to be fearful. But again, it's not something that I put a lot of weight on overall. But you want to look at trends. You don't want to let one report sway you one way or the other on what you believe the economy is doing. So if you look at this Yahoo Finance image, which I can blow up for you a little bit bigger there, we can see that the monthly change has been eroding to a bit, dating back to the beginning of 2023 to where we're at now. And at the same time, from January of 23 to March, we have seen the unemployment rate continue to increase there. So we have these things going in kind of directions that we don't necessarily want to see. But, from a lot of the payroll data that we've got, from a lot of the job loss reports, it's weakening. There's no one can refute that the job market is weakening to a degree. We have interest rates that are extremely restricted. So that's putting a lot of pressure, especially on mid to lower size company. That's something that the Fed handles. And you've heard plenty about President Trump asking for those rates to come down because they are putting a lot of pressure on middle and small size businesses. But there is still concerns about inflation that we've talked a lot about on this channel here. But if tomorrow's job report doesn't come in somewhat close to that $110,000, let's say we're below $100,000, 100,000 job additions, this could be a market that has been looking for a reason to sell, see a big swoop down. And don't be surprised if we see an S&P 500 down 2% tomorrow, if in fact the job report was in fact quite weak. So we'll have to see what tomorrow holds. But I think if it holds, it can come in slightly below, and I think the market can kind of hold off. It's been kind of holding its breath, and it's like, okay, it's not as bad as we thought. But if it comes in above, I think we can kind of continue to fly higher here and see a new record high for a second straight day there. So that's kind of my take on the jobs report. And again, today we got the ADP jobs report that came out. It focuses more on the private industry, and it showed that we actually lost 33,000 jobs in the month of June. Expectation was actually for 100,000 increase. So way off from the expectations from analysts there. Jobs are obviously a huge indication of an economy, the strength or weakening of an economy, because when you look at things like GDP, 70% is consumer driven. If consumers don't have jobs, if consumers aren't making money, if income isn't increasing, they're not going to be spending as much, which companies don't make as much money, and everything kind of trickles down from that perspective right there. So signs that you want to look for as an investor of a weakening and slowing economy definitely is going to start and end with the job growth or lack thereof. Because if companies are slowing their hiring trends, or if we see an uptick in unemployment and layoffs starting to happen, that could be an indication of what is to come. So this could be a report where we see a lot of those Doge cuts that took place in the past 2 months start to show up on this jobs report. We're gonna have to take a wait and see approach. You don't have to wait too long because that'll come out tomorrow for us. We have our tariff and trade deadline. That'll be coming next week. For those of you that sign up for our 2-day valuation workshop, we'll have our answer by that time, because from today, starting at 8 p.m. Eastern time, 5 p.m. Pacific, we will have that valuation workshop starting. So we will know our July 9th deadline. Do we just reset and say, hey, the end of July or whatever? It's kind of a moving target from there. So Canada came out, wanted to take a hardline stance at the United States, and they enacted their digital tax. That didn't last more than 12 hours because that was quickly refuted and reversed by Canada. Trump came out, ended all conversations with Canada around trade there. But today, the U.S. did, in fact, agree to the framework. There's no sign, there's no, at least since I was preparing for this live show here, that we have seen announcements from both sides, Vietnam and the U.S., around this trade deal here. But apparently, the framework right now is 20% tariff on Vietnamese goods, 40% on any trans shipping. So this was a workaround for many businesses and countries to get away from dealing directly with China, as they had things shipped to Vietnam and then they were shipped to the U.S. there. So that was kind of that workaround, that loophole. That 40% on transshipping is going to hopefully help with that to a degree. And then 0% on exports out of the U.S. to Vietnam, which that's not a huge number whatsoever. But that's kind of where things are looking at right now. So definitely something to focus on and to kind of watch coming up in the near term here. So What else do we have going on? How about that one big, beautiful bill? And see, it's so beautiful, I can't even spell it correctly there, but the Senate had passed their version of the new spending bill. The House passed it earlier there, and they're looking for that 4th of July deadline to head. But a few of the key impacts based on what it's at as of the Senate right now. So the House, it goes back to the House right now. It seems like they don't have enough votes on where it stands right now. But if it went through as it's intended to go through, how it's written right now, I should say, that would extend, number one, the 2017 tax cuts, which were Trump enacted tax cuts there. The one I'm most excited about here, being in California, a high tax state. So anyone that's from New York, which I know we have a lot of people from New York on this live show, and California here, the SALT deduction was raised to $40,000. Right now, we can just write off roughly $10,000. That's going to go up to $40,000. Seniors getting some deductions on Social Security, tax breaks on tips and overtime income, lower Medicaid spending, ending tax credits on clean energy. So that's kind of sent volatility through a lot of energy. NEE is one I've talked a lot about in my Discord community. We saw it when the House slashed this exact tax credit here. NEE shares went falling. What did I do? Bought the dip in the mid 60s. Lo and behold, shares were quickly up to the mid 70s. The House, the Senate passes the same thing. Those stay in there. Tax credits slashed. What happened? NEE falls. What do we see? A bounce back here today. So it's the same thing. These are opportunities that you're looking for. When people just seemingly hit the sell button because they're following others, they don't quite understand the impacts to the company, and they're not focusing on a long-term basis there. And we get a small bump in the child tax credit up to $2,200. I believe either the House or the Senate was actually going up to $2,500. So we'll have to see. Again, nothing is agreed upon yet because they're having to go back. And if there's any changes in the House, then we'll have to go back through a vote in the Senate, and we'll ping pong back and forth here. So I want to take a second to also tell you guys about my 4th of July summer sale that's going on. If you've been on the sideline watching our live shows for quite some time, and you've been hearing me talk about Options Edge Plus or Edge Plus, where I post all of my trade alerts, whether I'm buying a stock, selling a stock, buying an ETF, selling an ETF. If I'm doing option plays, all of that is found under a subscription in my Stock Investors Edge newsletter. We have a full Discord community where you get access to our stock deep dives, our weekly reports that we put out on the market. Right now, this is our biggest summer sale that we have going on. It's only going to go through Sunday. So if this is something you want to take advantage of, monthly subscriptions, annual subscriptions, you can get 25% off that. There's a link down in the description below there. Here's a quick kind of showing you what is entailing in the Edge Plus versus the Options Edge Plus. We have members only meetings for Edge Plus subscribers, diving into my portfolio as well from that standpoint. So definitely, if you're looking to take advantage of that, make sure you jump on that sale. And then I'll quickly go back real quick. For those of you that are just joining us, we have our 2-day valuation workshop. That'll be starting next Wednesday, July 9th through Thursday, July 10th. A 2-day valuation workshop starting at 8 p.m. Eastern time, 5 p.m. Pacific. Again, seats are limited. So if that's something that you have been kind of sitting on the sideline, truly trying to understand how do these people claim this stock to be a buy, claim this stock to be a sell, we're going to be diving into the world of valuation, maybe touching slightly on charts as well. So you kind of bring it all together from that perspective right there. So all of the information is down in the link below. You can click on that. It'll have pricing and everything for it. But I'm going to tell you right now, this is our first time doing the 2-day workshop. This right here will be the cheapest that we will ever offer. I told you that with the options one. I'm telling you that with the valuation one. So if this is something that you're interested in, this is the time to do it because the prices are only going to go up from here. So this is the cheapest that you will get it since it's our initial launch of the program. Again, the feedback was tremendous for the options one. I'm hoping to bring that same type of value to this valuation one here for our 2-day valuation workshop. So you can check that all out in the link below. And I could show you more on the sale that we have going for our 4th of July. Unlock your edge. Everything that you can see if you click on the gain. So if Options Edge Plus is something that you are interested in, normally $600, you can get that for $450. We paid for that last week in our trades. Last week, we garnered $840 in total gains just for a week. And that's if you just followed my trades. I show every single trade for just one option contract. I do multiple, but there's accounts here that are just starting with $10,000 accounts, and there's accounts in there for $1 million accounts. I show you and describe the trade. I describe what the risk, the max potential loss is, and then you can choose how much risk are you willing to take from that. You know what the gains are, you know what the risks are. $840 gains was based on one contract for the trades that we went through last week. So definitely make sure you jump in if options is something you want to learn, or Edge Plus, or you can combine both of them. Our Ultimate Edge Plus, which never goes on sale. You can also get 25% off, gives you access to both Edge Plus and Options Edge Plus. So hope to see you guys there to be able to join it. Hope to see you at the valuation. We have a lot of exciting things going on. Looking for a rock solid knock it out of the park second half. So that's all the information I got for you guys today. Any questions that I can help answer in the past few, or I'll stay for about 2 minutes for anyone that has some high level questions on any of the valuation workshops that we have, Edge Plus, Options Edge Plus. Be happy to answer those. Ann's got a question. How much is it? All of it is going to be down in the description below. Normally it is $300. If you do pay up front, you do get a big discount on the valuation workshop. If you're looking at Edge Plus, that's normally $400 for the year, $600 for Options Edge Plus. All of those are 25% off as well. What do we got? Travis from Upper Michigan, 14-year-old. Nice. Love to see it, Travis. Portfolio up 7.6% since I started investing in February this year. Most stock picks from you. I love to see it. T-Money. Making some money at a young age. You're going to be well ahead of your peers, my friend. And you are so welcome. Drew, good to see you. Thank you so much for stopping by today. Awesome. Well, I hope to see you guys at our workshop next week. And again, those spots are limited. So if it is something you are looking to do, make sure you take advantage of that. Or we'll see you at the Discord inside of our Stock Investors Edge, either an Edge Plus or an Options Edge Plus. We got a lot of exciting things going on over there. Thank you guys so much for the support. We'll continue to keep pumping out as many high quality videos as we can. And thank you guys for being a part of this great community. Hope you have a good rest of your week, and happy 4th of July to those of you in the United States. Take care.